Before the opening bell, U.S. indices, they closed down on Wednesday, this time pressured by automobiles and components, banks, and the insurance sectors. Now, on the economic docket, the MBA mortgage applications, they rose 15.3% for the week ended March 27th, while at the same time, ADP private payrolls, they declined by 27,000 in March. Also, market U.S. manufacturing PMI falling to a read of 48.5 in March, while construction spending, that also fell a total of 1.3% in February. In addition, we had ISM non-manufacturing PMI that fell to 49.1. This all as 95% of SP 500 constituents traded lower yesterday. Now, after the markets closed, the U.S. Federal Reserve announcing plans to temporarily ease leverage rules for larger banks, aiming to allow those banks to expand their balance sheets and keep lending. Banks will be able to exempt any holdings in U.S. Treasury debt or deposits at the Fed from their calculations of the supplementary leverage ratio. Meanwhile, we also do have expectations out of Altria Group and Walgreens Boots Alliance, while in terms of expectations today, we do have results from CarMax. Now, on the economic docket before the opening bell, we have both February imports and export figures. We also have the February trade of balance, and we have initial and continuing jobless claims numbers. At the same time, right after the bell, we have the ISM New York Index, and we also have factory orders for the month of February. Taking a look now at the markets, the SP 500 sees its key resistance at 2510, and that's in focus. As long as 2510 is the resistance, expect a return to 2434. Short positions below 2510 are favored, with targets at 2434 and 2400 in extension. The Nasdaq, that aims for 7320, while the Dow Jones sees its key resistance to 21,330.